Alright, so I'm going to be going over the previous GBPJPY trades I have been taking. So overall, whenever I'm looking at the market, I'm always doing the top-down analysis, pretty much meaning that I start off on the higher time frames, being the monthly and the weekly, and I slowly make my way down. So overall, at the monthly time frame, we do have this cross of moving averages here, pretty much telling me that overall, the biggest picture, there's more sellers in the market. Even though on the monthly time frame with these key levels, they do look very close to each other. That's mainly because of the ranges, the pip ranges that there has been. So as you can see, pretty much each time GJ came to one of these key levels, there was some form of rejection. Overall, pretty much downtrending, making lower lows and lower high points. So we could definitely draw a form of a trend line here. So I'm gonna actually put this in a different color to signify the weekly time frame. So we do have this nice trend line going on here. We do have across moving averages, but overall the market did respect this area of resistance here, pretty much telling me that sellers are still in control. Even looking at the daily time frame, I know we were pretty much stuck in this kind of consolidation range here, but I felt like it was very easy to catch any of these moves whenever the market did come to one of these areas in the range, because overall it was consolidating. I think in about like a 200 pip range. Yeah, so 200 pip range. So you definitely could have taken advantage of that. But overall, looking at the daily time frame as well, we do have a cross of moving averages here. When you're expecting the market to break out, it comes down to a lot of things, especially looking at the higher time frames, being the daily, the 4-hour, all those things. Because normally with my trading style now, I used to be more of a day trader, but now I'm more of a I guess medium term swing trader, meaning I'm holding trades anywhere between 1 to 3 days. So I feel like where I'm at in trading right now is probably my favorite type of trading, just based off the fact that there's not a lot of noise. The payout, the risk to reward is extremely well, and overall, I feel like this type of swing trading benefits me as a person the most, because I'm not in and out of the market, but I am catching pretty decent sized moves. Like overall in this move, I ended up bagging around 250 pips, and I could have, I did decide to close, but overall, I could have scaled in here and then ended up bagging 250 pips, but with more lots, and so pretty much now coming down to the same exact thing. Trend lines, right? Let's draw some trend lines. So I guess we could do point A and point B right there, right? So anything under the trend line would be a sell zone, anything above would be a buy zone. So once we did have that cross moving averages on the daily time frame, and pretty much each time the market did come to this area of resistance here, I'm going to find a median point. Pretty much this area of resistance here, I was expecting a reversal. This is a time when you could pretty much play with like sell limit orders and stuff like that, buy limit orders. But overall, like I said again, first of all, we have this bearish engulfing candlestick. I'm going to be drawing everything out here. We have this bearish engulfing candlestick at that area of resistance. So let's pretty much break it down to lower time frames. Now, every time there's an engulfing candlestick pattern, you want to pretty much draw out where, let me get rid of some of this stuff. You pretty much want to draw out where the previous bullish candle was, such as this, just so you could see the break of structure on lower time frames. And then the retest, so you can get in on the retest. So after the engulfing happened, as you could see, here was a previous bullish candle where it started and where it closed, and then here is the engulfing candlestick pattern here. So then that would be the break of structure, and then we have the retest right here. So you could have taken advantage of this fairly easily. I didn't actually enter position here, but definitely you could have. So now overall, market is downtrending based off the 4-hour time frame. So first thing I did was pull out my Fibonacci tool, point A, point B. The market did come to about that 61.8 area, which I was expecting it to, based off of this exhaustion here, and there's support and resistance there. So overall confluence, right? So once it did come up to that area and this bearish candle had formed, I knew the market wasn't ready to come back down. One, because it didn't engulf, and two, look at that seller's exhaustion. So I wouldn't be selling with that much exhaustion towards the bottom. So now we know that we're at a 61.80. I could pretty much delete fibs and pretty much start looking for potential risk to reward areas. So, you know, right, I was expecting the market to come down to this negative 27 extension level just based off the fact that, you know, we have confluence in this area, we have that monthly key level, you know, we have this area of resistance here as well and support. So I was expecting the market to come back down to this area. So this was my targeted area, right? So now talking about entries, looking for an entry, I knew my entries are going to be based off the lower time frames. So I'd have to wait for that to set up on the lower time frame. So here there's an area of resistance, right? Here there's an area of resistance overall. So pretty much how you could have taken advantage of this is simple, right? Wait for rejection. So here we have that first rejection. Here we have an area of support. I'm going to show you two ways you could have taken advantage of actually catching this move. So let me change this color. Let me delete the fibs. Like I said, you know, keeping in mind we're at a 61.80 PRZ level. Here we have resistance, and here we have the first rejection along with buyer's exhaustion here, and then here we have the retest on resistance and a nice bearish variation candlestick pattern, right? So you definitely could have entered right here after this bearish variation. Now, before you even enter, you want to pretty much set up your risk to reward ratio and your lot size and determine everything. So you want to go from pips, percentages, and then lastly comes the money. So overall, I'm looking at a pretty much stop loss area of about 18 pips. So, you know, we have to pretty much look for a 3-to-1 or a 1-to-3 risk reward ratio. So my projected area was down here. So the risk to reward is definitely there, right? So now pretty much what you want to do is determine the lot size before you even enter the market. So let's say you have about, let's say you have a random number. I'm going to put $20,000 account balance, right? And me personally, I decided to risk 3% this trade just because I was confident in this trade. So 20,000, actually let me do it on the 20,000 times 0.03. We have about a $600 risk here. So, you know, 18 pips. So then you have to see what kind of lot size you can determine based off the pips. So me personally, I ended up going with a lot size of 3 on this trade. So, you know, a lot size of 3, you know, that'll be around a $600 loss, a little bit less because it's not 20 pips, but around a $600 loss. And if we do a 3 lot to our take profit area, which is about 250 pips away, you know, we're making $3 per pip. So we're talking about a $7,500 potential reward. So as you can see, you know, keeping your losers small and your winners big will definitely help you grow that account, right? And, you know, every time, all right, let me write this down actually. So, you know, 3 lot, meaning we're making $30 per pip, right? We have about a $600 loss and about a $7,500 reward, right? So now let's say you always stick to this rule, right? Keeping your losers small and your winners big, right? Cutting your losers quick, right? As you can see, every time you lose, it's going to be very insignificant compared to your winning trades. Most of the time, like I said before, you know, if I have losing trades, they're really small, and one winning trade, I'll pretty much make back all the losses plus profit, right? So this is pretty much my system and how I trade. Okay, so overall, like I said again, you know, $7,500 potential reward for a potential loss of $600, and you can also scale in, and I did scale in this trade. So overall, I was in on about a 7 lot on this trade. So as you can see, I'm gonna put this right here, and then once the market pretty much broke this area of support here that I have drawn out, I knew oh my god, I can't speak. I knew automatically that it was going to come back to retest that area, just because, you know, we didn't have across the moving averages yet on the 4-hour time frame. It was still blue over red, right? So I knew that there wasn't enough bearish momentum to actually push the market downward, but pretty much as you could see, our entry is at the middle of this candlestick here. And you know, we did have this nice engulfing candlestick pattern right here, pretty much telling the sellers are in control. So now once that area of support was broken, you can wait for a retest, and pretty much here we have the first rejection. But me personally, I wouldn't have entered on this candlestick here just based off of all this exhaustion. You know, we don't have across the moving averages, but definitely, you know, we could pull out our fibs from here, point A, point B. So as you can see, it was right at that 61.80 area again. So once this candlestick close tested, I waited a little bit to see if there'd be a variation form to actually enter, but that wasn't the case. But then this variation form happened here. This variation form happened right here. So that's when I actually decided to enter the market again, calculated my risk to reward. So this time my risk was about, yeah, it was about 15 pips for about the same reward down here. So as you can see, on this order I ended up catching 250 pips. On this order I ended up bagging over 200 pips. So risk reward is there again. You know, another 4 lot in this order, actually, just because I was already in profit on this order, right? So I did use my equity there a little bit, and I decided to put a 4 lot in on this order. So as you can see, the market just completely went down to that negative 27 level. But I did end up closing a little bit early just because I knew the market was going to retrace big. So I ended up closing both of these orders once this area was hit, and I saw this candlestick close with this much exhaustion here. So these 2 orders are now out of the picture. All right, the only order I have left open and running. So I did end up catching this here as well, and I do have an open order there as of right now. So, you know, same thing goes again. Here we have a lower low point, so we're gonna go from our point A to our point B here. So the market did end up, you know, coming up to that 61.80 retracement level, which I actually wasn't expecting. I thought it was just going to retrace off the 50%, just because, you know, here we have previous support, and then here we have this kind of weird gap where there was an engulfing candlestick pattern here. But, you know, overall, let's break it down to the lower time frames. So as you can see, this was actually really tricky for me to enter because it was just straight and it was steep. But, you know, pretty much basing it off of, you know, this area of resistance here, right? This could have just been a gap on that area. So, you know, thinking about it, I was actually looking at the 5-minute time frame when I did decide to enter, and I was waiting for a transition in trend. So pretty much once I saw that I came down to this level here and had retraced with this bearish engulfing candlestick here, you know, I did think it was a little bit sketchy to enter, but, you know, overall I did decide to enter. I believe I did decide to enter right here after this candlestick, and I had my stop loss at about 18 pips, and I'm gonna drag this out. So 18 pip stop for a potential of, you know, 200 pips. So definitely the risk to reward is there. Currently this order is still open. I'm gonna wait a little bit longer to see how this 4-hour candlestick closes, but I'm pretty sure I'm gonna close this order right now because I'm up 100 pips. So yeah, I'm gonna see how this candlestick closes, and, you know, determining how this candlestick closes, I'll close my order. But overall, that's pretty much how I've been trading GBPJPY. Nothing too crazy, you know, just regular medium swing trading. So, you know, time frame correlation is extremely important, as well as keeping your emotions in control. Because, you know, when I saw this candlestick form, you know, it kind of freaked me out a little bit, but that's when I broke it down to the lower time frames. Because, you know, this was extremely volatile, and I was like, damn, is it really going to break structure? Am I really going to close, you know, this order up here when I was just up, you know, 90 pips or so? You know, you really have to control your emotions. So always keeping a leveled head is extremely important as well, calculating risk management and everything, your risk to reward ratio. So overall, I felt like these moves were fairly easy to catch, fairly textbook, if you want to call it. But yeah, so like I said, again, if you have any questions, just email me or DM me or text me.